How wars are funded. Money and conflict. Wars are decided on battlefields, but they're won and lost in bank ledgers. Armies march on paychecks, tanks require fuel, and air forces demand complex supply chains. And all of it costs enormous sums. Behind every front line is a quieter war fought with budgets, borrowing, inflation, and political will. Understanding how wars are paid for reveals as much about power and priorities as any strategy manual. Taxation, the oldest way to pay for war. The most straightforward and politically explicit way governments raise war money is through taxation. Taxes on income, property, trade, and wealth have long been used to finance armed conflict. During wartime, governments often raise tax rates, introduce new levies, or expand the taxable base. Examples: wartime income taxes introduced or raised in many countries during the 20th century. Tariffs and trade taxes used historically to fund empires. Taxes are transparent in theory, since they require legislative approval and are visible to voters. But they're politically painful, so many governments delay or dilute them, preferring other methods when possible. Borrowing, government debt, and war bonds. When taxes won't or can't cover costs quickly enough, governments borrow. Borrowing takes two common forms: issuing government bonds to domestic or international investors and selling war bonds directly to the public. War bonds have a political advantage. They mobilize patriotism and move private savings into state hands without immediate taxation. In world wars, the won and classrooms, mass bond drives framed buying as a patriotic duty. Civilians literally lent money to their armies. At the macro level, borrowing shifts the burden to the future. Today's military spending becomes tomorrow's interest and principal payments. A country's ability to borrow cheaply depends on reputation. Reliable economies issue long-term debt at low rates, while weaker states pay higher interest or cannot find lenders at all. Printing money and inflation, seigniorage as a weapon and a risk. When borrowing and taxing are insufficient or politically infeasible, governments sometimes turn to printing money, i.e., having the central bank create currency to finance spending. This yields immediate funds with no formal debt issuance, a benefit known as seigniorage. But printing money creates inflationary pressure because more currency chases the same goods and services. In wartime, when supply chains are disrupted and goods are scarce, inflation can accelerate into hyperinflation if overused. Historical examples abound. Revolutionary regimes and collapsing states have financed military campaigns with unchecked money creation and paid with currency collapse and social chaos. Economists argue that modest, controlled liquidity assistance from central banks can be helpful to stabilize markets during war, but unchecked monetization of deficits risks destroying the very society the war aims to defend. Loot, tribute, and resource control. Financing through conquest. Across history, war economies often relied on what they could seize. Ancient empires paid armies with tribute. Medieval campaigns targeted wealthy cities. Modern invasions have sought oil fields, mines, and trade choke points. Control over productive assets, ports, mines, agricultural land, can immediately reduce a belligerent's need for external funding. However, conquest as a financing strategy is risky and morally fraught. Occupation costs are high, resistance is costly, and international isolation or sanctions can nullify any short-term gains. Still, resource capture or control of trade routes has long been an element of the calculus when states budget for war. Private capital, arms markets, and the defense industrial complex. War is increasingly a public-private endeavor. Governments contract private companies to build weapons, supply logistics, and even provide armed personnel. The modern defense industrial complex, aerospace firms, weapons manufacturers, logistics companies, supplies the material capacity of war and often lobbies for sustained military spending. Private finance can also underwrite wartime expenditure. Banks, investment funds, and private equity may finance defense contractors, and private lenders sometimes buy sovereign war debt. In some conflicts, wealthy individuals and private groups directly fund militias, paramilitaries, or proxy forces. This blending of public purpose and private profit raises perennial questions about accountability, cost inflation, and the incentives that shape policy decisions. War can be lucrative for suppliers even as it costs lives and public treasure. International financing, allies, loans, and external support. Wars are rarely isolated. Allied states may subsidize a partner's war effort through military aid, concessional loans, or grants. During World War II, for instance, the Lend-Lease program allowed one state to provide arms without immediate payment, effectively financing a partner's defense. Today, military aid and defense guarantees remain central tools of geopolitics. International financial institutions IMF, World Bank rarely fund offensive wars, but often play roles in reconstruction, stabilization, or conditional aid that can indirectly affect wartime financing. Political alliances, bilateral credit lines, and international bond markets shape who can sustain prolonged conflict. Sanctions, financial isolation, and evasion tactics. Modern conflict strategies increasingly use economic warfare. Sanctions, asset freezes, trade embargoes, and exclusion from global payment systems aim to cripple an adversary's ability to pay for war. Sanctions target a state's export income, banking access, or elite finances. States facing sanctions often resort to creative evasion, opaque intermediaries, barter, deals, alternative currencies, or turning to sympathetic partners. Illicit finance, smuggling, money laundering, and shadow banking can sustain conflicts even under heavy restrictions. These dynamics make modern financial systems a contested battlefield in their own right. Cryptocurrency, crowdfunding, and new financial tools. In the last decade, digital currencies and online crowdfunding have changed how non-state actors and even states can raise funds. Cryptocurrencies offer a pseudonymous channel for donations or payments, and social platforms can mobilize micro-donations quickly. Militias, NGOs, and diaspora networks have used online platforms to fund operations, humanitarian relief, or resistance movements. While crypto can help bypass traditional financial controls, it remains volatile and traceable in many cases. Regulators and forensic analysts have grown more adept at following flows on public blockchains. Still, new financial tools add a layer of complexity to wartime finance and raise ethical and legal questions about who is allowed to fund whom. The cost beyond the battlefield, reconstruction, and debt servicing. Paying for the fighting phase is only half the picture. Post-conflict reconstruction, social services for veterans, and economic stabilization often become decades-long financial obligations. Wars can saddle nations with persistent debt burdens, crowding out development spending and fueling long-term instability. Sometimes reconstruction itself is financed by external loans that come with strings attached, shaping political outcomes. In the worst cases, war-driven debt spirals fuel further unrest, creating a vicious cycle where conflict begets debt and debt begets more conflict. Political choices and moral costs. Who bears the burden? How a war is financed reflects political choices about who pays. Heavy taxation spreads the cost across citizens, but is politically costly. Borrowing defers the burden to future taxpayers. Printing money taxes savers indirectly through inflation, while privatized funding channels can concentrate gains among contractors and the wealthy. These choices influence public support, economic equality, and the legitimacy of both the war and the governing regime. Financing mechanisms can therefore shape not just the outcome of battles, but the political order that follows. The quiet frontline of finance. Money is not neutral in war. It determines how long a country can fight, what strategies are possible, and who wins the post-war world. From taxes and bonds to seizures, private capital, sanctions, and digital currencies, the methods states and actors use to fund conflict reveal competing priorities. Short-term victory versus long-term stability. Secrecy versus transparency, efficiency versus accountability. Understanding wartime finance is essential not only for historians and policymakers, but for citizens. Choices about military budgets, lending, sanctions, and corporate oversight are choices about the moral and economic future of societies. Wars may be fought with rifles and planes, but they are won and lost in treasuries, bank vaults, and on balance sheets. If this opened your eyes to how money fuels conflict, share it. Discuss what financing choices your leaders are making. And ask who pays the true cost of war. Understanding the economics behind conflict is the first step toward demanding smarter, more humane policies.